Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of Euro USD and we got to see some crazy up move on the chart of Euro dollar yesterday. You can see here dollar tumbles on hawkish ECB. The euro rallied Thursday after the ECB raised interest rates by 25 basis points. The ECB, as expected, raised its main refinancing rate by 25 basis points to 4% and said future decisions will ensure that the key ECB interest rates will be brought to levels sufficiently restrictive to achieve a timely return of inflation to 2%. So fundamentally, euro is bullish right now. Okay, so as a result, it's better and safer to look for buy positions only. If you look at the chart of dollar DXY, then yes, as expected, DXY broke the support yesterday, the previous low, and made a low of 102.10. Overall, the structure of DXY is still the same. Market is forming lower lows, lower highs. There is not much change on the structure. The dollar is under the dominance of sellers right now. So as a result of which, we can look for sell opportunities here. So during the day, if DXY tries to recover, then it will face some selling pressure around 102.57 and 102.72. 102.72 seems to be a strong resistance for day traders, because we can see that we have Fibonacci 50% retracement around the area, as well as the previous low will also be acting as the resistance here. So 102.72 will create some problem for DXY if DXY tries to recover. But if the volatility of the market is low, then we can also expect 102.57 or 102.40 also to act as minor resistance for the day. So this is all about DXY. Now let's talk about Euro USD. But before I proceed, I would like to show you that after a few hours, CPI is coming up on euro, so be careful with your euro positions. And there is also a news on US dollar, but this news is not very impactful. This will not bring crazy volatility to the market, but yes, you need to be careful with your euro positions. You can go to economic calendar and check out for the details. Now let's head towards the Euro USD. So if you look at the chart carefully, then we can see a bullish flag, isn't it? We can see a bullish flag on the chart, and bullish flag is a trend continuation pattern. In simple words, you simply need to draw lines here. Once you'll see that market is crossing the flag, market is breaking the flag, the line at the top, you can consider that market is going for a bull run again, and you can consider a buy. This is all about bullish flag. Bullish flag is a common pattern. Okay, and trading on bullish flag is quite simple. So you can draw a flag like this and simply wait for the market to break the line at the top. Once you'll see one market is breaking one point, let me write it down, 1.095253 level, you can consider taking a buy position as well. For additional confirmation, look at the chart of dollar. If dollar is falling, going down at the same time, it's like an additional confirmation to you. What will be your target here? Your next target will be 1.1000. This will be your target, because this is not only the previous resistance or previous high, but also 1.1000 is a round number, is also a psychological resistance. So if Euro USD continues the upside, then yes, this should be your target. Clear? But if we look at the chart carefully, if we forget about the flag pattern, if we keep aside the flag pattern, then if we observe the chart here, then we can see that market structure is like this. It means that market is right now standing at the top. And in this type of market, it's obviously always better to take a buy at retracement, to take a buy at pullback. And right now we can see that market has not come for a pullback yet. So during the European session, after CPI or by US session, if you see that market is coming down, instead of taking a sell position, okay, try to look for some buy opportunities. So on the chart of Euro USD, the best level to take a buy position is 1.0879 to 1.0863. 1.08, let's make it 80 to 1.0863. This is the best level where you can expect the buyers to be present, where you can expect the market to get some strong support from the 50 moving average here. The previous resistance will be working as support here, etc, etc. So this seems to be the best support on the chart of Euro USD if market comes down for retracement. But the problem is that this level is quite far away from the current market price, and when the market is extremely bullish, then market usually doesn't like to go for a deep retracement, deep pullback. So this level will remain, but if market doesn't come for this level, then we can also look for retracement, some minor support you can say. We can use Fibonacci here. Okay. See, right now we are using Fibonacci here, and with the help of Fibonacci we can also see that we have some levels on the chart right now. First of all, if you see the volatility of the market remains like this, market is not in a mood of going down. Try to understand the market emotion. So if market is not in a mood of going down, then market may take some support around 1.0915 to 1.0920, around this level. If market takes support, if you see the market is forming a hammer, market is forming showing price rejection from below, we'll give you the confirmation that market is taking support, and you can go for a buy. On the other hand, if market shows some volatility and market breaks this level here, then obviously you should be looking for support at the next level, that is 1.0900 to 1.0895. This is your next support if FIBO 23.6% retracement level does not work. So 1.0915 is there, but if the market is low in volatile, so as a trader, okay, as a trader you need to be careful. So this is trading, this is not gambling. So as a result, you need to make decisions at the right moment. So 1.0915, if it works, if market shows price rejection from below, you can look for a buy. But on the other hand, if market breaks the level, look for a buy at 1.0900, 1.0895. But the best level is obviously 1.0880 or this particular level here. But this level is far away. And you can see that already market is trying to take support right now, where you can see the previous resistance, not resistance I say, previous high is acting as support here. So this is how price action works. So fundamentally market is bullish right now, so as a result it's better to look for buy positions only. And we have a clear bullish flag on the chart. So during the day, if market tries to continue the upside, okay, wait for the market to break the line at the top. As long as market is inside the flag, try to avoid, because this is your no trading zone. Once you'll see the market has crossed 1.095253 level, you can look for a buy. Your target will be 1.1000 because that's the next resistance, both psychologically and according to the chart as well. But in case market doesn't go up, if market starts falling, markets comes for correction, retracement, then obviously 1.0880 to 1.0863 is a better level technically. But market seems to be very bullish. Market may not come to that level also. So we can look for some support around minor levels, weak levels like 1.0915 or 1.0900, 1.0895 as well. You can also use the Fibonacci tool like this. You can see I have drawn Fibonacci from this particular level here. On your chart, you can also consider drawing like that also. So my dear friend, these are the trading opportunities that I see on the chart right now. Right now, trying to avoid, because as I said, in bullish flag, as long as market is inside the flag, we consider it as no trading zone. Okay, so that's all from my side. I can be wrong also, so please follow proper risk management, do your own analysis, and research also. Do not gamble with your hard-earned money. Bye bye. Take care.